What if I told you that Wall Street isn't designed to make you rich? It's designed to make them rich first. And the craziest part is, the biggest investing secrets aren't illegal. They're not hidden in some vault. They're hiding in plain sight. Millions of everyday people invest their money hoping to become financially free, but most never achieve the results they expect, not because they're stupid, not because they didn't try, but because they were never told the truth. In this video, I'm going to reveal 5 secrets Wall Street doesn't tell you about investing. Secrets that can completely change how you build wealth. And number 4 is the one that keeps most people poor without them even realizing it. Let's begin. Secret number 1, the market is designed to transfer money from the impatient to the patient. Wall Street makes money when people trade, not when people wait. Every time you buy or sell a stock, someone earns money from that transaction. Brokers, trading platforms, hedge funds, they all benefit from activity. But here's the truth most beginners never hear. The biggest profits in investing don't come from trading. They come from holding. If someone invested $10,000 in the S&P 500 and left it alone for 20 years, historically it could grow to over $40,000 or more without doing anything. But most people don't do that. They panic when prices drop. They sell when the news sounds scary. They buy when everyone else is excited. This emotional cycle causes people to buy high and sell low, the exact opposite of what builds wealth. Meanwhile, patient investors quietly hold their assets and let time do the work. Wall Street doesn't emphasize patience because patience doesn't generate fees, but patience builds fortunes. Secret number 2, most professional investors don't beat the market. This might shock you. Many professional fund managers, the so-called experts, don't actually beat the market over the long term. Studies have shown that over 80% of actively managed funds fail to outperform simple index funds over time. Think about that. These are people with expensive degrees, powerful tools, and years of experience. Yet most of them still underperform something as simple as an index fund. Why don't they tell you this? Because actively managed funds charge higher fees. Index funds, on the other hand, are simple, low cost, and extremely effective. They don't try to guess winners. They invest in the entire market. And over time, the market has historically gone up. This means average investors who use simple strategies often outperform people using complicated ones. The lesson here is powerful. You don't need to be a genius to build wealth. You just need to be consistent. Secret number 3, Wall Street profits from your fear and excitement. The financial news is designed to trigger emotions. Headlines like, "Market crash coming," "Stocks are exploding," "Invest now before it's too late." These headlines create urgency. Fear makes people sell. Excitement makes people buy. Both create transactions, and transactions generate profits. For Wall Street, successful investors don't react emotionally. They understand that markets go up and down. Temporary drops are normal. In fact, market crashes often create the biggest opportunities. Some of the wealthiest investors in history made their fortunes by buying when everyone else was afraid. While the average person panicked, they stayed calm. While others sold, they bought. Emotions destroy wealth. Discipline builds it. Secret number 4, the biggest risk is not investing at all. Most people think investing is risky, but not investing is often riskier. Why? Because of inflation. Inflation slowly reduces the value of your money. For example, if inflation is 3% per year, your money loses about half its value in 24 years. That means if you keep $10,000 in cash, its purchasing power could drop to the equivalent of $5,000 in the future. Simply saving money is not enough. You need your money to grow. Investing allows your money to work for you. Instead of trading your time for money forever, your money starts generating more money. This is how wealth is built, not through saving alone. Secret number 5, wealth is built quietly, not dramatically. Movies and social media make investing look exciting. Fast profits, quick wins, overnight success. But real wealth is usually built slowly and quietly. Most wealthy investors didn't get rich overnight. They invested consistently, month after month, year after year. They allowed compound interest to work. Compound interest is one of the most powerful forces in the world. It means your money earns returns, and those returns earn returns. At first, progress seems slow, but eventually, growth accelerates. Even small amounts can grow into large amounts over time. The key is consistency, not perfection. Bonus secret: simplicity beats complexity. Wall Street often makes investing sound complicated. Complex strategies, advanced indicators, constant trading. But simple strategies often perform better. Invest regularly, hold long term, stay disciplined. These simple actions outperform complicated systems because complexity often leads to mistakes, simplicity leads to consistency, and consistency builds wealth. Real example: Investor A tries to time the market, buys and sells constantly, reacts to news, panics during crashes. Investor B invests consistently every month, doesn't panic, doesn't try to predict the future. After 20 years, Investor B is far more likely to have built significant wealth, not because they were smarter, but because they were more consistent. Now you know the secrets Wall Street doesn't tell you. Investing isn't about luck. It's about discipline, patience, and consistency. The earlier you start, the more powerful your results can be. If you want to learn more about investing, financial freedom, and building real wealth, subscribe to Cashflow Academy. Your financial future starts today.